Hey fellow investors and fellow Stock Cardians. It's Wednesday, April 7th, 2021. I'm Hoda, co-founder and CEO of Stock Card, reporting to you from a volatile but mixed stock market. Today, I took a look at the three main indices first and then switched to researching a video game making platform that has been suggested by a few Stock Cardians as a good stock to watch. I also stopped by our partner Joseph Hogue's latest video and took a look at a 3D printing stock, again worthy of a spot in your watch list. The stock market indices had a volatile day and finished the day with mixed results, but not too far from where they started. It seems the US trade deficit is reaching a new record high as the economy booming and stimulus dollars are being spent, hence the higher trade deficit. As usual, there is a battle between those who think the market continues to rally and those who are warning of a crash. That's why the market fluctuated without a clear direction for one more day. On today's winners and losers list, there wasn't any company I have on my radar or wanted to add to my radar. Instead, I decided to talk about a recent IPO that some of you Stock Cardians have suggested a few times. It's a highly requested stock called Skills, ticker SKLZ. Thank you Peter Bruni, Ray Martez, and a username GD for suggesting this company to me. Let's go through the research together. Look up Skills in the search bar, and it seems the stock is a recent 2020 IPO in the gaming industry. The company has high growth potential thanks to more than 12% expected annual growth in the industry in the next few years. Skills is a platform that enables users to either play, compete, or make mobile games, and it competes with similar companies such as Roblox, another recent IPO in the same space. Since it's a new IPO, there isn't much annual information and data that is available to us yet, but looking at the stock price after hitting all-time highs in February, the stock price has dropped significantly since then. Even today, the price dropped more than 5%. As investors, we would want to know why and what's dragging the stock price down. Let me go to the key information section on the company's stock card and click on the link to the company's website to get its latest investor presentation. It has one of the highest engaging platforms compared to the likes of TikTok and YouTube. Of course, thanks to the pandemic, the company benefited from almost 100% revenue growth last year, but even more importantly, the revenue it generates from each user is almost 4 times higher than the cost it takes the company to acquire those users. That means the company's core economic engine works. However, a few slides further down, I noticed that the company is growing its user acquisition spend faster than its revenue growth. While revenue grew about 100%, marketing spending has gone up by 150% or so. I believe this is a rapidly growing market, but I'm not sure if Skills can maintain its growth rate without deploying more cash into acquiring users. So the story here is what we have seen recently from several recent IPOs. Rapid growth due to marketing spend and thanks to the COVID-19 pandemic. Also, excellent user engagement metrics. However, an unprofitable company that needs a lot more cash to turn profitable without a clear path to profitability as losses widen. I tend to hold off investing without rushing to buy such stocks. It's better to see how the company competes and grows after the pandemic and get a bit more confirmation on its ability to generate cash from its core business and then invest, even at a higher price. If the growth potential is there, the stock would have many years of success and we would get a chance to invest later on. Let's wrap up today's episode with a stock recommendation by Stock Card partner Joseph Hogue from the Let's Talk Money YouTube channel. He just published his latest video and shared the top 5 3D printing stocks to consider. The 3D printing list of stocks is among the featured list of companies on your main Stock Card dashboard page. This technology is having a comeback. A few years ago, there was another excitement cycle about the future of 3D printing. At that time, investors assumed everyone would print things they need on a day-to-day basis and the technology would revolutionize consumer retail. Of course, that didn't pan out. Jeff Bezos has famously said that no one would take the time to print a toaster for personal use. The new excitement cycle around the future of 3D printing is focused on shaping the future of manufacturing. From 3D printed rockets to 3D printed houses, we now see more efficient, less wasteful, and more customized manufacturing possibilities thanks to the 3D printing technology. From the list of stocks Joseph shared, I particularly liked a company I never knew. It's called MTLS, ticker MTLS. Apparently, it is also a large holding by ARK Invest as a potential disruptor in the 3D printing space. Let me pass it on to Joseph to introduce you to this company. Joseph, take it away.
First up here, $1.8 billion material lease, ticker MTLS, evolving right along with the 3D printing landscape for over 30 years. Material lease is one of ARK Invest's largest single stock positions, with $235 million across 2 funds, plus held in that 3D printing ETF. The company operates across the medical, manufacturing, and software segments, helping customers manage and optimize their own printing processes. Now, like almost every company in the theme, total revenue took a hit last year, closing 13.3% lower, with the biggest drop in that manufacturing segment. And through cost management and cash collections, though, operating cash flow actually increased. Now, revenue in the fourth quarter was up 11% from the prior quarter on a 26% jump in that manufacturing component, so there definitely seems to be a recovery going on. The company finished last year with 111 million euros in cash, almost net cash positive against 115 million euros in debt on their balance sheet. Shares trade for about 9.2 times sales and hopefully can get back to that revenue growth this year. It's traded as high as $87.40 a share over the last year, which would be a 154% return just from here.
Thank you for that research. Folks, don't forget to reserve your spots for Friday's meet and greet sessions using the link in the show notes so that I can share a few tips and tricks about how to use the Stock Card platform in your research. As always, if you like to give a stock card a try, research as many stocks as you want, and receive a stock pick ideas from successful investors, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.